Hello, price action traders. Are you here because your analysis are very accurate? Each time you say a particular pair will sell, it sells. Each time you predict it's going to buy, it buys. But the only problem is that before it will first of all buy, it will hit your stop loss before going your way. You're very good in your technical analysis, but you are experiencing a problem with your entry point. This video is for you. In this video, I'm going to share my life experience. This is not a content. This is pure my life experience. My YouTube is all about sharing real life experience to help other forex traders out there to solve the same problem, since we have the same enemies, the market. That's the same enemies we have. Okay, without saying much, guys, I'm going to dive into the topic of today: how to choose a proper entry points for your trade. For the purpose of this tutorial, I'm going to use two pair. First, I will use volatility 75 index for those that trade Deriv, and secondly, I'm going to use the Gpbusd for those that trade currencies to show you that it works in both parts. So let's say I want to pick a trade on the volatility 75 index. What do I need to do first? As usual, price action strategy, we don't use any indicator. So we'll go to the highest time frame to do our top down analysis. So I'm currently at the D1 daily time frame, and if I zoom down, I can see that the market is currently bullish, is currently buying from the daily time frame. So I can see that this was the lowest low the market made. The next lowest low, it came to retest the same position. The next one was this one, and the next one was this one. This one couldn't reach where the other one stopped. So this has already proved that the market is soaring higher. The market is actually buying. But we cannot just jump into the trend because the market is buying. You start buying. No. We need to look for a proper entry point. So we go over to the 4 hours time frame to actually see what we need to see. From the 4 hours time frame, of course, there's some things I'm seeing here. If you train your eyes, you can see them. I'm seeing the double bottom, which is a very valid signal. Very valid signal for those that trade structures. So now there are some levels we need to take note of. So we'll go back to the daily time frame to take note of those levels. So I'm going to pull out my horizontal line and mark this level. This is where the market stopped, the previous market stop. This is the immediate low before the market started pushing up again. So let's go back to the 4 hours again. So from the 4 hours, you can see that this respected the immediate low. This respected the immediate low, and the market is currently pushing up. So what are we to look out for again? We have to look out for another immediate low, whereby if market passes that low, we know that, look, the market has changed character. We call it change of character for those that trade the ICT market. So now, what is the immediate low we're looking out for? This is the immediate low. If market breaks that low, if this sell from the H4 breaks below this low, that means we should stop looking out for a buy and start looking out for a sell. Of course, we're not just going to jump into the trade like that. So we're going to mark this level again from the H4. So now we are going to wait patiently. One of the key factors for a proper entry point is patience. If you can have patience in your trading is going to move to the next level where you don't expect, that the next level where you don't even imagine yourself to be. If you have patience in Forex, you can do all things through Christ that strengthens you. So now I've marked that level. What next am I to look out for? First and foremost, I will have to analyze this region to know currently what is going on in this region. First off, there is a sell signal here. You can see this small candle. Let me mark it for you. This small candle, this is a demand. This is a supply candle that actually supplied the sell. But we're not going to rush until this market breaks below this, give us change of character. Even when it gives us change of character, it will also have to start buying again, give us like higher higher high, higher low, higher high, higher low, higher high. Then if it finally closes the higher high, there's another thing I'm going to also teach you too. The equilibrium the equilibrium point, or the equilibrium level that is between the supply candle. The ICT market call it the I think they call it the the discount level, something like that. So if you have not read that book, look for that book and read it. Join my Telegram channel. I have that book, that PDF there for ICT market. So you need to allow your trade to enter into that discount region, that equilibrium region between the discount region and the supply region, this level, supply region. Once the price gets into that region, we don't still take the trade. Once the price gets into that region, we now move to the 15-minute time frame. 15-minute time frame is the time frame that we use to enter our trade, because we want to avoid losses. By all means, try to avoid losses. Losses in Forex is inevitable, but we can be very, very careful by all means. So from the H4, remember there's this zone. We can mark it with since I'm using my mobile phone for this analysis, so some drawings cannot stay. So when you go over to the 15-minute, you can see that this is that region. This is that region. So from the 15 minutes, there's two things that is happening in this place from the 15 minutes. First thing that is happening here is there was an M. There was an M. You know what M is? So if you haven't watched videos about chart structures, please do where to watch it. Is on if you go to my YouTube channel, you will see the videos there. There was an M. Previously, I took this trade. I'm going to show you guys. I took this trade. I think I have a video like that on my TikTok or on my Forex. YouTube Shorts is there. I took this trade where I moved my $30,000 to $62,000 with this particular structure. So now I want to enter this trade. Now what should I be looking out for? Now the first thing I need to be looking out for is this is the immediate low of this particular pair. which I don't expect market to break lower than this. If it breaks lower than this, then it breaks lower than this and properly goes and break lower than this. Probably goes to break lower than this. I'm going to wait for a retracement. Once market come back to this equilibrium point, then probably start retracing again, then I sell. Once market breaks, first thing first, market has to break this level. You can see market has to break this level because this is the lowest, this is the immediate lowest level. This point here. If market breaks, this point here, if market breaks below this level here, after breaking below that level, I'm not still going to enter. I'll wait for a retracement back to the equilibrium zone. Then that retracement that should happen, the market should not be able, if the market breaks above this, your analysis is wrong. Like, your analysis is not, the market has changed direction now to a buy, but it's not confirmed a buy yet until it breaks above this high, this place here. If it breaks above this high, the market is a pure buy. We'll have to redo another analysis and start looking forward for a buy signal. But if the market breaks below this and retraces and come back to this equilibrium area, this is where we'll set our trap. Then if it's a retracement, if the one candle retracement, we'll enter our sell and place our stop loss above, not exactly on this line, above it, because sometimes market can also be very funny. The market can retrace, push up to test that stop loss before pushing down. It's what we call smart institutional system, or the big people, the big funds, the big hedge funds firm. You get those that, you know, they have the big money. They are the ones that they are the ones that move the market. Their activities are the activity that moves the market. So what they target mostly is stop loss. Those areas where those guys are very smart, those areas where they know that the traders are piling up their stop loss, that is the area they target mostly. So for instance, now in this kind of trade now, a whole lot of traders are piling up their stop loss, probably here in this line here. There's a lot of stop loss in this line. Let me explain. There's a lot of stop loss below here. There's a lot of pending order on top of this line here. Pending order and stop losses. So these hedge funds now, all those big firms, they would like to pull this trade below to hit the stop loss, then finally start going. And when it gets to this point, the market is actually a change of character and it has started selling. This is the equilibrium point. This is where it start giving us that retracement sign. You can now enter from 15 minutes, not from H4, from 15 minutes. Somewhere in this 15 minutes is where we should be expecting it to happen, around this area. So what we are in this is 15 minutes. What we are saying in 15 minutes, the market needs to break below this, probably start pushing up again. Of course, we need to see higher high, higher low, higher high, higher low, and then when it gets to the equilibrium point, which is supposed to be in this region between year and year, and it gets in between this. If I should zoom this, you see that this is a supply. This is a supply candle. You get supply signal candle, and this is the discount area. So market came here, but the discount area pushed it back again, but it still break through and started selling deeply. You get. So now we're expecting market again. To actually break through from here. Then breakthrough from here for us is a sell trend, push up again back to this, inside this discount area, in the middle, the equilibrium area. You get equilibrium area. I can use something to mark this area. Is the equilibrium area, the hot zone. So I'm expecting market to pull here, come back to here, and then not push above this, start pushing down. Then I will place my stop loss above, remember that line, 20 pips or 25 pips stop loss, and then I'll start selling. Yes, so that is how to enter a trade probably. So if you don't have time to wait for it, you need to actually have time. If you want to be successful in Forex, you have to have time. If you don't have much time to wait for it, you can place a pending order in this zone. You can place a pending order in that zone where your stop loss will still be the same, your take profit will still be the same, and leave it. But it's better off than jumping into the trade just like that. So let me go to Gpbusd and show you that the same rules apply in Gpbusd. So let's go over to Gpbusd and check what's going on Gpbusd. So as usual, the Gpbusd, I have to go over to the daily time frame to check what's going on in the daily time frame. So from the daily time frame, I can tell you for free that this market is actually a buy market, a buy trend. The market has actually been buying for months. It's not just this. For months, it has been buying. This is a daily candle, and this is the immediate. Level where the market has made. You can see it couldn't break. The next one was here. It couldn't break. The market keep. So from here now you can see that the market is soaring high, and the market actually broke through above this level, which is the immediate high. Broke above that level, so that is a change of character again. So the market is a bullish market, it's a bullish trend. So that means we should be looking out for a buy signal actually. So we'll go over to the we're going to mark this level first. Let's mark the level. So let's go over to the H4 to know what's going on H4. Sorry, it's loading. So remember now the market has just broken through that level on the daily time frame. That does not mean, as usual, we should just jump into that level. We need to get a confirmation from the H4 and the M15, the 15 minutes. So from the H4, what I can see here from the H4, there is actually a change of character, just as usual, just as expected. The market broke above that level. You can see market broke above that level and started doing some minor retracement, which is very, very okay, but it did not go lower than this level. You get, the market just stopped on this level and started pushing up again. You get, so means the trend is still on, the trend has not finished. You get, so we're going to go over to the 15 minutes to see what is actually going on the 15 minutes, to know how to enter this trend. So from the 15 minutes, the market is soaring. The candle is very bullish. It looks as if there was a news today in the market that caused this action. So from the 15 minutes, the market has actually broken above this candle and there was a retracement. So what are we looking out for? Let's go back to the H4 and take note of this level. Take note of this level. Okay, so between this level and this level, between this level and this level, in the middle of them is our equilibrium. This is a discount. This is a discount price. From discount price, if you zoom down, you can see, I think there's a supply candle there. There's a supply candle here. So this is a discount. There was a discount here. There's also a supply candle here. Came down, there's a discount. It couldn't break below that discount. It pushed up again. So on this equilibrium area, remember this is a buy. On this equilibrium area, what are we expecting? What are we expecting to happen here?